Hi, Greg Dorsey here. It's Monday, February 28th at Leeb.com, Leeb.com. Hey, be sure to sign up for our free newsletter if you haven't done so already. Well, protest movements in the Middle East and North Africa show no signs of running out of steam. Libya is still the most hotly contested as strongman Muammar Gaddafi remains hunkered down in Tripoli, even as other parts of the country come under opposition control, and the country's assets abroad are being frozen. Oil prices have backed off somewhat now that Saudi Arabia has pledged to meet any production shortfalls from Libya. That's welcome news for equity investors since lower energy prices take the pressure off consumers and producers alike. But don't get too comfortable. While there's unprecedented amounts of liquidity sloshing around the global economy these days, which is good for the markets, good for the economies. Continued unrest in the oil-rich Arab world should lead to further disruptions in supply of crude, could send prices towards $150 a barrel in a hurry, and that would be big trouble for the economy. The real test will be Saudi Arabia, where a small group of dissenters are calling for protests March 11th and 20th. At this point, we see the taps remaining wide open there, but stock investors in Saudi Arabia are getting a bit nervous, and they've sold off positions, taking the chief index down more than 12% from the mid-January highs. Here at home, stocks rallied on the day, gaining more than 0.5% on the S&P 500, with each of the 10 S&P sectors ending in positive territory. Volume was fairly decent by recent standards too. Now that said, we suspect we'll be trading a range for a while, bounded by the recent high at 1344 or so on the S&P, and 1280 on the or so on the downside. So remain selective with your buying. We think you'll have plenty of opportunities here in the coming weeks. That's all for now. Thanks for stopping by. We'll see you again soon.